heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. And there's change at Apple as the CFO, Maestri, steps back and the iPhone maker promotes from within. We have the details on Apple's new finance chief.
And Meta calls out the White House. CEO Mark Zuckerberg says the government pressured Facebook to censor their COVID posts during the pandemic, and he regrets giving in.
Meanwhile, the NFL, Kelsey brothers win big. A $100 million podcast deal with Amazon after Taylor Swift helps bump the audience. That and so much more coming up. But first, let's just check in on these markets because we're being whipsawed by one name and one name in focus, Ed, ahead of Nvidia earnings. I know we're going to be digging deep on individual names with you, but NASDAQ 100 coming up 0.5% because of that name turning into the green. Two-year yield flat. In fact, we've got a big two-year auction. 10-year yields have been moving some. Look, we're at the moment in a holding pattern before we get the key macro movement that is earnings tomorrow of Nvidia. Bitcoin just off by 2.5%. Interestingly, after that ramp up over the course of the weekend, we're at 61,800 is where we currently trade. But Ed, what are you watching on that micro?
I want to go straight to Apple. The stock actually now higher. It had been lower when the news broke that Luca Maestri would step back as CFO and his number two would take over because he's the guy on the call that gives the detail. Usually, we're going to get more on that with Mark Gurman in a little bit. JD.com, $5 billion share buyback, positive for the US listed shares. Why? It's a really tough environment right now for e-commerce in China. This is something that is shareholder friendly while the macro picture deteriorates. And we're going to get a bit more on that as well, Karen.
Yeah, because it is ugly out there for Pinduoduo, PDD once again. Let's focus in on some that are trying to support the market, others that are hurting with Ryan Vestelika. And Ryan, it really was a shock to the system that PDD wasn't doing as well as had been anticipated, that even the cheap stuff isn't selling in China. What does that mean from a broader context when it comes to China?
Good morning. Thanks for having me. Yeah, there's a lot of concern about the strength of the Chinese economy right now, and seeing a company like this, which is so tied to the consumer, seeing them really give a pretty tepid outlook, pretty cautious, is certainly a reason to have some sort of broader concerns just about the state of things there and what the outlook is for China going forward. We did see that stock drop, I think, more than 20% yesterday, and it's down a little bit more today. So there's just some broader concerns now about just the strength of, one of the biggest economies in the world.
So, Ryan, the JD.com story is kind of a read-through one where they are trying to do something to, I guess, disassociate themselves with the wider e-commerce picture in China. And buybacks always cheer up investors.
Yeah, absolutely. And this, of course, comes after Walmart recently closed out its stake in JD. So there's certainly been some cause for concern for those investors. Obviously, they are trying to signal, still a focus on shareholder value and so forth. So, yeah, $5 billion buyback, never a bad headline.
I am just really interested in ultimately the context of China and appetite to be buying into what are sold off names. What point do we get lured back in? Because we saw real volatility around US tech names at the start of August, and people bought the dip. Why not in China at the moment, Ryan?
I think there are just some broader macro concerns about their economic outlook, whereas people are feeling a little bit more positive about the US. People are anticipating rate cuts. It seems like a lot of the major mega cap tech stocks here in the United States continue to post pretty strong fundamentals, pretty strong trends. AI remains a huge focus. And of course, the biggest players in AI are all here in the U.S. And that's just, it's a very easy decision, I think, for people to continue looking at U.S. names, continue buying U.S. big tech.
That picture tells the story as of this morning's session. Bloomberg's Ryan Vestelika, thank you very much. Let's get a closer look at tech stocks this morning and think about the equity markets and what is a massive week. Denise Chisholm is the director of quantitative market strategy at Fidelity Investments. And there is this big macro event happening on Wednesday. I don't know if you've heard about it. It's called Nvidia second quarter earnings. But what's so interesting is the timing comes after many weeks of very clear capital expenditures guidance. So you track that data and you ask yourself, what does it tell us? I know that you look at CapEx to sales and you might have a different story, Denise.
Yeah, I do have a different story. I mean, there is a lot of concern by investors around how much technology companies are going to have to spend in terms of CapEx, and that might be a signal of sort of the peak of the cycle. But when you look at the data for the overall technology sector, CapEx is just starting to pick up now. And when you look at CapEx relative to sales, it's actually declined over the last year, and it's in the bottom half of the distribution. I think that that is the unique part this time in terms of technology. The free cash flow generation is much, much different than anything that we've seen in the past. So on that free cash flow generation, the stocks are actually still cheap on price to free cash flow on a relative basis versus the rest of the market, which actually cushions the blow to the extent that fundamentals have peaked and may slow. So some of that mean reversion might actually be priced in.
There is an index level discussion to be had. You know, I know that you don't track a specific name, but there's this fantastic chart, right, which shows that when the S&P 500 moves a percentage point in either direction, it's usually Nvidia's fault. And the market, there's not much left thereafter. What do you make of that, the sort of dependence on that high concentration of single names at the index level, Denise?
Yeah, we have a lot of data on historical market concentration, and it's true. We haven't seen the market become this concentrated this quickly over the last year, or be this concentrated since, basically the 80s or the late 70s. But that concentration level in and of itself doesn't necessarily mean it's a negative signal for the market going forward. The market can stay heavily concentrated for an extended period of time. We certainly saw this in the 40s and 50s, which is not to say that that's the exact parallel. But I think what's more important to me, as much as there's been a bifurcation between cap-weighted indices and equal-weighted indices really lagging, I think that a lot of the signals that I'm seeing suggest that there might be a much more broadening out over the next year on a relative basis, where it's not just technology stocks being the dominant leaders, and the market might actually encompass more maybe interest rate sensitives and more cyclical sectors outperforming as well. I think the unique part of this cycle was around technology fundamentals. Technology fundamentals did something on an aggregate level that I've never seen in my database going back to the 60s, which is go from bottom quartile growth to top decile growth in under a year. Well, when that happens, that begets that relative outperformance we've seen. But as the starting point from this level, it doesn't necessarily mean technology will lag the market, as those cash flows and earnings growth might actually be durable, but it does usually mean that it makes room for other sectors to outperform as well.
What's so interesting, though, is how one-sided the market is on the single name. At the moment, analysts, 66 of them say buy Nvidia, 0 say sell. But then I go to the S&P more broadly, and look, the price targets just aren't that many ahead of where we currently trade at the moment. We're at 56.28, and well, most of the analysts actually see lower than that. So when we do give up leadership, so to speak, with the big tech names in the Mag 7, is it not going to be, if they lag, it won't be made up for by the other smaller players that suddenly do rally?
Well, I think you could end up in the situation where the big names just potentially tread water with a catch-up trade in the equal-weighted indices. I think that the big difference that investors are concerned about is what we saw happen in 2000, which is the MAGs, let's call it the Mag 7 this time versus that technology bubble last time, was going down on an absolute basis. When you're talking about just maybe lagging or hanging in terms of a relative perspective and growing into those multiples, I think that that's a much different story from a risk-reward perspective. And it sets up the rest of the market that really hasn't seen the earnings growth recovery that we've seen in those cap-weighted indices to still play out over time, which gives dominance to that equal-weighted potential or down the cap spectrum relative performance.
Ultimately, though, does technology still look like it will outperform to the extent that we've almost become immune to?
Look, I think it looks like a positive risk reward to me, and I say that because, A, after you've seen fundamental inflection like we've seen, the sector continues to outperform about 70% of the time because those free cash flows and earnings growth tends to be durable. And this goes back to the fact that when in a lot of my data, 2022 looked like either a very soft hard landing or a very hard soft landing, but it did look like a landing. And if that was in fact a landing, then we are in the early to mid stages of what could be a multiple year recovery. And that includes in terms of technology earnings growth. So if you couple that sort of durable cash flow on the valuation disconnect, which is to say that they're still in the bottom half of the distribution of relative free cash flow, I think you have a positive risk reward.
Denise, very quickly, historically, when the S&P 500 gains double digits in 1H, it does well in the second half of the year. Will that happen?
That's correct. Well, I can't tell you if it will happen, but you know the math, which is a ball in motion tends to stay in motion. And it's all around the fact that usually the stock market gets it right. And by that, I mean, it might actually be telling you something that you don't really know already, which is that more of the S&P 500 might be discounting a hard landing than you think.
Just such deep historical analysis. We love it. Denise Chisholm, thank you so much for joining us.
Always great to be here.
Director of Quantitative Marketing Strategy over at Fidelity Investments. Meanwhile, coming up, closer look at Polaris Dawn. That didn't happen. SpaceX's first spacewalk mission has been delayed. Meanwhile, Ed, what are you watching?
I'm looking at shares of Walmart, a story that broke in the last 10 minutes. The company wants to expand its online marketplace. This is the digital platform for third-party vendors. You're thinking about competition with the likes of Amazon and Etsy, and what they're doing is just adding more stuff to it. Think about pre-owned watches, collectible trading cards. It's all part of an announcement they made out of San Francisco this morning for their sellers conference. Not doing much to boost the stock, up 0.3%. We'll track it. This is Bloomberg Technology.
Taking a look now at SpaceX, the company has delayed that launch of a rocket carrying 4 private astronauts to space, part of what was going to be a groundbreaking mission aimed at performing the world's first commercial spacewalk, known as Polaris Dawn. We want to get out to Bloomberg's Lauren Grush, who's been all over this. Once again, helium. It's a recurring theme with these space issues.
Yeah, helium is prone to leaking. It is a small molecule, so it can find its way out of various small crevices. But this just comes with the territory of following rockets and rocket launches. There's always some kind of delay, but hopefully it won't be too lengthy, and hopefully we'll see this launch take off soon.
They basically have a backup window every morning at the same time, right the way through the weekend. So I imagine it will go off. A big part of this is not necessarily the crew of Polaris Dawn. It's the spacesuits, and you wrote about that last week in the Business of Space newsletter. Like and subscribe. Tell me about the spacesuits and why they're so key to what's due to take place in the mission.
Yeah, so for people who have followed SpaceX up until now, you might be familiar with SpaceX's so-called spacesuits, but the spacesuits that we've seen up until this point are really just pressure suits, which are used by the astronauts. They're worn when they fly to space, when they come back from space, and they're really mostly meant to be used in the case of an emergency, in case the capsule depressurizes or there's some unforeseen event. What SpaceX built for this specific purpose is a spacewalking spacesuit, and it's really meant to be used for this exact reason, for being able to leave the vehicle, perform repairs on the outside of a spacecraft. For this mission, SpaceX is just going to test out the durability of the suits, but these suits look pretty cool. They definitely look like they're the sleek white design of the pressure suits that we've seen, but they're supposed to be able to withstand the vacuum of space even better. They have heads-up displays inside of them, and they have the signature SpaceX style that we've all come to know and love.
I mean, absolutely fascinating as to whether or not we're going to be investing in, the new way in which we see the suits evolve, Lauren. Ed was just talking us through the fact that we're going to be seeing a new launch window every single day, but ultimately, how quickly can things like a helium leak be recovered from?
It's hard to speculate on this. I think when it comes to SpaceX, I am always amazed at how quickly they are able to kind of turn things around. If you recall, about a month ago, they had a failure with their Falcon 9 rocket while launching some Starlink satellites, and they were able to get back to launch within just a couple of weeks. So SpaceX has definitely garnered a lot of experience by launching so frequently. So it may be something that is easy to fix. With this particular mission, I don't think SpaceX wants to be taking any chances. It's probably
Right.
one of their riskiest missions that they've done to date. They'll be going to a much higher altitude than astronauts have gone to in a very long time. So I think they just want to make sure everything is buttoned up. So it's possible they might take some extra care with this particular helium leak.
I mean, there is risk in this mission. 700-kilometer altitude, approximately, for the spacewalk. Only 2 of them will do it. And what I find so amazing is, like, the crew's in quarantine, basically, right now. And yet Jared Isaacman's on Twitter, or X, saying, oh, don't worry, we know exactly what's going on. We're talking with SpaceX. He's kind of key to this, because he went on Inspiration 4 as well.
Yeah, Jared Isaacman has definitely become an interesting SpaceX figure. He has bankrolled the development of this program and also helped to fund this flight. And it's not, he'll be flying again in the future too. He didn't just buy this one flight. He has kind of invested in an entire program, research and development program called Polaris. And this is just the first part of that. It'll eventually culminate with the first crewed launch of SpaceX's Starship rocket, which is that massive vehicle that they've been building in South Texas. I assume that Jared will be on that as well. We'll have to wait and see, because we still have some development road to get through. But yeah, he's definitely become a dominant figure in the SpaceX community.
Okay, see you at 3:38 a.m. Eastern Time tomorrow. Bloomberg's Lauren Grush, maybe. Thank you. Another big story we're tracking is Apple. Longtime Apple CFO Luca Maestri will step down from the job at the end of the year, handing the role to top deputy Kevin Perek after more than a decade. For more on the announcement, we go to Bloomberg's Mark Gurman. I guess why? Why step back, and why the number 2 getting promoted?
Yeah, I mean, this is really not that interesting in the sense that this has been long planned. Apple has been telegraphing this for the last year or so. If you recall, at the end of last year, one of Luca Maestri's top 2 deputies, Saori Casey, she resigned and then later became the CFO of Sonos. And to me at the time, that became pretty clear that they were preparing for a transition, and that it was not going to be her job, but rather Kevin Perek's job. Kevin Perek had a series of responsibilities related to market research, financial analysis, preparation for earnings, investor relations, and then he picked up Saori Casey's responsibility over financial planning and analysis at the end of last year. He actually moved into her office at that time. And he has been the heir apparent for several months now to Luca Maestri. He had been shadowing Maestri. He had been working very closely with Apple's executive team and Tim Cook. So this is something that has been in the works for several months now. Luca just turned 60, right? He's been in the corporate environment. He's been a CFO for decades now. He's obviously made a lot of money at Apple. Luca actually, at some points in his career, has commuted many, many miles to the Apple campus. This is obviously a very tough role. It's not a role you want to be in for more than a decade, probably, with everything at stake. He took over for Peter Oppenheimer in 2014. So It made sense. The bigger picture here is you're sort of probably going to see a big turnover of Apple's executive team over the next few years. And this strategy where they're not really allowing these executives to fully retire and just play golf or fly their planes or what have you, and have them stick around in a smaller role. This is now the 3rd executive in a row in the last 4 years that we've seen do this. The question is, how long is Luca going to stick around in this new role? And then one thing I know investors are curious about Perek. Everything I've been told and everything that I believe is that he's ready for this role, and I don't expect any hiccups.
As you say, he's going to be overseeing information technology and real estate functions, we understand, but in that reduced role. Meanwhile, Mark, all of this is in the broader context of they've got to still be selling phones, they've got to be innovating, and September the 9th, we understand, is when we're going to be getting our eyes on the latest new phones.
Yeah, September 9th, the iPhone 16 line, new AirPods, new Apple Watches will all be introduced. And then we'll get the performance of how these phones did from Kevin Perek at the end of January during his first earnings call as CFO. And all expectations are we're going to see some decent growth in the holiday period over the iPhone 15 Pro. There were no major new Apple Watches a year ago, no major new AirPods a year ago. So they've sort of set themselves up for a little bit of a layup to give themselves some nice growth in the holiday period.
Mark Gurman, as always, we thank you so much. All things Apple. Meanwhile, coming up, a look at the top tech stories making headlines this morning, including LG weighing in a potential IPO for its India business. That's next. This is Bloomberg Technology. Time now for Talking Tech. First up, LG Electronics is considering an initial public offering for its India business, tapping a booming stock market to help hit a target of $75 billion in electronics revenue by 2030. Now here's what LG's CEO, William Cho, had to say about the market opportunity in India.
In India, we boast #1 market share in every single product. So as you know, India is one of the fastest growing market in the world. And the India will be continue to be a key market for our growth. But it's not about just the product sales. We aim to be the national brand in India. So as a company who have grown and loved by Indian people, we understand we should grow with Indian people. Providing the product and solution which will make eventually their life better. And for the IPO, yeah, I understand there's increased interest in Indian market among global investors.
It's the first time the South Korean company has spoken publicly about an Indian debut, subject to persistent market and media speculation. Plus, Sony, well, it's raising its price of its PlayStation 5 in Japan by 19% to nearly 80,000 Japanese yen, or $550 US, almost 4 years into the console's life cycle. The surprise move comes even as PS5 sales actually slowed, and Sony is widely expected to refresh its offering with a more powerful mid-cycle revamp of the console in coming months. One that you're watching, I'm sure, Ed. What have we got coming up?
Okay, big story. Mark Zuckerberg alleging that Facebook was pressured by the US government to censor content related to Covid-19 during the pandemic. That story's next. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Let's take a look at the markets. And the story here is very clear. Technology a big factor behind pushing stocks near to their all-time highs. The Nasdaq 100 up modestly, a few tenths of a percent. But Nvidia is a big part of that. Up more than 1% in the session, up more than 150% year to date. But unbelievably up almost 1,000% from its October 2022 bear market low. This is astonishing, and it's the story this week with earnings after market on Wednesday. We'll have special coverage, and we will speak to Jensen Huang. All eyes on it. Meta's interesting as well. Caro, give us the headline behind what's going on with Meta. It was a big one that broke last night. Backward looking, not doing much for the stock. It's completely flat. But this is a story that on social media and elsewhere, everyone's talking about.
It is, because CEO Mark Zuckerberg has been penning a letter to Congress where he alleges that Facebook was pressured by the Biden administration to censor content related to COVID-19. He says he regrets the company's decision to accede to the demands. For more, I'm pleased to say we're joined by Bloomberg's Aisha Counts. And this is to the Committee on the Judiciary of the U.S. House of Representatives. Why put forward this viewpoint right now, Aisha?
I mean, it's such a contentious time, right? We're going into the election. We're just a couple months away. Content moderation has been a topic of conversation for a long time, but it feels like even more so. Election policies have changed. Employees that do things like content safety have been fired or let go. And Meta has been taking a step back from politics and news. So the timing of it sort of makes sense to me as we head into the eve of a really consequential election. And it's almost like Zuckerberg's saying, we're not going to do the things that we did in the past during this election.
There are kind of two storylines here, right, Aisha? There's the allegation that Facebook was pressured by government officials, and then there's the admission of regret on the actions that Meta or Facebook did take at the height of the pandemic. What were those actions? What were the kind of things that Meta or the Facebook platform did when it found certain content relating to COVID-19?
I mean, it was pulling certain content, right? If content was considered misinformation or misleading, it was either pulling that content. Sometimes there was a note that was directing people to CDC resources or saying that this has not been verified. It was those sorts of things. So it was a mix of labeling things, but then also some posts and content were removed, which, you know, as Zuckerberg said, he sort of regrets at the time. At the time, some people felt like that was censoring and voices were not being heard. And so there was a lot of things that were happening at the time. And again, like this sort of movement and moment in social media, a lot of these companies are pulling back from taking down content like that. They're either just labeling it and leaving it up altogether, or they're just not doing anything. So it's a very different environment than it was even just a couple years ago.
But still, governments push back on that, and we see what's just happened to the CEO of Telegram for the fact that they leave a lot of content unmoderated. We'll get into that in a moment, Aisha. But on the nuts and bolts of things, it was still Meta's ultimate decision on what to take down. It's just they felt that the pressure was unnecessary coming from the government, right?
That was one of the key things that I took away from it as well. Like Zuckerberg acknowledged, we made the decision, we took down the content, they have control over their own platform. They didn't like the pressure that they were feeling, but again, they did ultimately make the decision themselves, and the decision rests with them, regardless, right?
Bloomberg's Aisha Counts on a really top story on the Bloomberg today. Thank you very much. Let's keep the conversation going. Joining us for more on Meta is Frank McCourt Jr., Executive Chairman of McCourt Global and founder of Project Liberty, a movement essentially that aims to make the internet a safer place, but that includes on social media platforms. And Frank, let's start very simply with your reaction to Mr. Zuckerberg's letter.
Yeah, good to see you again. I think that we're at a really key moment here. And we have seen in the last few months a real, the wind has shifted. There's a real change. You know, you saw Congress recently pass KOSA with overwhelming numbers. There's huge judges ruling on Google and the antitrust. I think that there's a real sea change here happening, and people are fed up with the way the internet is being used and the way these big platforms are exploiting individuals. I see this, quite frankly, as a cynical attempt by Mark to shift the focus from Facebook and Meta and Instagram and all of the different products of Meta away from the habits of Meta and the exploitive nature of the platform, and the fact that it's surveilling millions of Americans to being a victim, quite frankly. And I think that that's not right. We should keep our eye on the ball here and what's really going on, and not shift this to a news story about Biden and Facebook being a victim. I think it's just not correct.
Well, Frank, should any administration have the power to, if the allegations made by Mark Zuckerberg in that letter are correct, have the power to put pressure on a specific company or social media platform to act on specific content?
Of course not, and nor should the platforms have the power. And this is the whole point of Project Liberty. And what we're saying is our information, our identity, our data, our information, our personal information. This is something that is in this day and age is our virtual being, is our personhood. It's who we are. Individuals should be deciding what gets, how their content gets used. We shouldn't be having these big platforms make these decisions. It's crazy, Ed, to have these platforms surveil us scrape our data, and then and have this power. We don't, of course, don't want the government to be able to do it. But do we want a few big companies to do it either? I think not. Yeah. It's just it's the same end result. We just don't. We want the power to come back to people. Enough is enough on this.
But people aren't always great, Frank, to be perfectly honest. And when I'm thinking what's happening in France with a Telegram co-founder and CEO, he did too little to help protect children, ultimately, is their accusation. They allowed the spread of child sexual abuse material. At what point, at what line do you draw when the companies do need to get involved? That's such a hard one to fathom, really.
Well, Caroline, your question assumes that the companies are, in the first instance, surveilling us, scraping our data, collecting it, and then we're asking them to do something with all that personal information they have. I think we need to change how the internet works so individuals have the power and they have control of their identity and their data, and they're not manipulated. You know, what comes to my mind here is that we're talking about censorship and how this all works, and it's these algorithms which are so powerful. We can't be thinking of censorship in an old pre-internet way when this algorithmic behavior that and these algorithms that are applied to this massive amount of our personal data is in this exploitation is happening. Algorithms and censorship, they're at odds with one another. The algorithms are preventing us from actually having coherent discussions. You know, what I think about is what Jack Dorsey said in Oslo in June. You know, he said too much discussion about free speech and not enough discussion about the lack of free will.
And Frank,
we're all having this circular conversation, and what's broken is the technology.
Well, you and Jack Dorsey align in perhaps seeing decentralization as the answer, and you have the protocol, Decentralized Social Networking Protocol, and you want that ultimately to be the reworking. That's why you had a bid out on TikTok to sort of rework the way in which these social media platforms work and make them decentralized. But how would a decentralized social media platform stop inaccurate information, the spread of child sexual abuse?
Well, so first of all, technology alone is not going to stop all bad human behavior. But getting people back in charge of their lives, of their virtual self, owning their personhood, having agency, making decisions is a critical first step. Of course, we need to hold people accountable. Remember, the internet, Caroline, when it was started, was a decentralized a piece of technology. It was there to connect us and make us smarter. It moved civilization forward. It only became centralized over the course of the last 20 or 25 years. It's been colonized by a few companies. And what is the practice? They scrape our data, they surveil us 24/7, and now we're asking them to figure out censorship and moderation and so forth.
Frank,
this
can I
power
very
should be
quickly,
in the hands of individuals.
Apologies to cut you off, but very briefly, have you still got money to buy TikTok? Do you still want to buy it?
We still want to buy it, and because the reason we want to buy it, and I want to make it clear, I don't want to be the CEO of a social media platform. I want to catalyze this change to this new internet where individuals own and control their data. Yeah. So we see TikTok as a massive opportunity, a fantastic opportunity to bring 170 million users over to an internet where they're in charge of themselves, their identity, and their data. And by the way, they receive value for that data as well. There's still going to have to be practices and accountability for good human behavior. But we don't want the government or these big platforms deciding what's good for each of us. I don't believe.
Frank McCourt Jr., great to have you on the show. We appreciate it. Founder at Project Liberty. Coming up, a conversation with the CEO of Cribl. That's Clint Sharp, who's just been leading the company to record-breaking growth since 2018. That's next on Bloomberg Technology.
Data infrastructure startup Cribl announced it's raised a new funding round, bringing its valuation to $3.5 billion. It's an unusually high number for a company that's not focused exclusively on AI, in the current fundraising climate, but there's a lot more to it. To discuss, Clint Sharp, CEO of Cribl, with me on set in San Francisco. I've heard so many people say that management of data is the key to all of this. There are many names that sit within that field, but let's start with the basics of what Cribl is and does.
So we're a data engine for IT and security, which is helping customers deal with this massive growth in data. Your data is growing at a 28% compound growth rate. And I've asked 1,000 customers this question, is your budget growing at that rate? And the answer is universally no.
Okay. So we're driving the growth. We're looking for money. And I'm interested, therefore, Clint, where that $3.5 billion goes to.
Yeah, so we will be continuing to fund our international expansion, product growth, and continued growth in APJ specifically. So we're really excited to continue to fund our growth in global expansion.
There's a phrase or a term I've not used in some time, centaur status, which is basically marketing speak for, I think Bessemer invented it or coined it, but $100 million or so in annual recurring revenue upwards. That shows some growth, but where do you go from here? I mean, I'm assuming that at that valuation, things are going pretty well in real terms for you.
Yeah, so we're growing from a streaming company into a broad spectrum data platform that's helping people deal with IT and security data, which helps them operate the systems that operate the business. It's an underserved persona, and so the growth is really a reflection of the value we're providing to customers.
Clint, what's so interesting is, of course, you're helping streamline data. Many would immediately go, of course, that's all to do with artificial intelligence. But ultimately, is that the near-term issue of all your clients, or are they faced with other issues? And is it not all about AI?
So we hear a lot of AI fatigue amongst our customer base. Every vendor that's sitting down in front of them, every keynote that they go to is all about the technology, and we're embedding AI into our technology to help people better understand their data, be able to more quickly and easily configure their systems. But they want to know what the AI technology is going to do for them, as opposed to being about the technology itself.
I want to dig a bit deeper on AI fatigue. That is something you think is short term, or are you worried that maybe all of the investment that many companies, big and small, have made was a little bit overdone?
I mean, I think this is an internet scale disruption in technology, certainly. But if you look at the gap between when these trends start and when the value starts to be received, there's a pretty big gap in that time. And so in that time, there's a lot of talk about what will happen as opposed to being backed by customer success and what value they're actually seeing from the technology. And so we remain focused on making sure that our customers know what exactly we're doing for them. Well,
more than $300 million to go spend, $3.5 billion valuation. We appreciate you coming on to talk us through the business. Cribl CEO, Clint Sharp. Meanwhile, they're money for some, like Cribl, but not for others, particularly for the movement to diversify Silicon Valley and technology more broadly. Groups like Girls in Tech and Women Who Code, they're closing up shop, while other not-for-profits are trying to rebrand their efforts to just stay afloat. Adriana Gascoigne, founder of Girls in Tech, joins us now to discuss. Adriana, you've had to unwind the not-for-profit that you built. Why?
It's a tragedy. I built it 17 years ago, and it was a huge need then. It's still a huge need now. I truly believe diversity is crucial. Having diverse workforces is crucial in developing the most optimal, amazing, innovative technology products and services. And in 2007, there was such a disparity of our gender in the tech space. And so I wanted to launch an organization that would encourage and empower women to take risks and enter into the field. It's an amazing, amazing field. I learned so much. I feel like we were growing and building so many amazing products and services. I wanted women to be a part of that, right? I was one of 35 employees back in 2007, and I was the only woman, and I was the only woman person of color. And so I knew that when I launched the organization, the goal was to create awareness, get more women involved, and talk to them, meet them, see them, hear their stories, encourage people to sort of reach for the stars and launch their own businesses, move up the ladder, be CEOs. So, 17 years later, we're in 35 countries.
But Adriana, you got the scale, but why then close? Because money turned off? Why are people no longer funding your business, your company, your not-for-profit?
Correct. Money turned off. I would say 2023 was probably the hardest fundraising year for us in record over the last 17 years. And I think it started with COVID issues, people closing their doors, businesses closing their doors. Then it turned into high-tech layoffs, budget cuts, reorgs. And then it turned into the BLM movement, believe it or not. Even though we support people of all backgrounds and races and genders, we want to make sure we needed funding. And a lot of the corporate funders ended up going to organizations that focus on the Black population. And so we lost out on some of that funding. And then it turned into sort of the DE&I backlash. So during the high-tech layoff issue and reorgs, where companies were freezing their dollars, they were also realizing that in many cases, DE&I policies, training programs, initiatives were not working. And so there was a huge group of DE&I executives at Fortune 500 companies that were getting laid off. And then as a result, the budgets closed as well, which hurt us.
Adriana Gascoigne, founders of Girls in Tech. Thank you. Now, coming up on the show, Amazon is looking to reach new heights by signing with NFL stars Travis and Jason Kelce. Details on the $100 million podcast deal next. This is Bloomberg Technology.
Amazon is making a 3-year, $100 million bet on the Kelce brothers. NFL superstars Travis and Jason Kelce will join Amazon's Wondery with their podcast, New Heights. Bloomberg's Chris Palmieri joins us with the details. Hot on the heels of the Call Her Daddy deal that we saw with SiriusXM. Now it's kind of the antithesis kind of a podcast. Talk us through why the number is so high.
Well, this is kind of sort of the amazing thing about the podcast industry. So last year, the big story was retrenchment. Everyone was canceling shows, companies were getting sold, people were being laid off. This was after a few boom years where people were just throwing money at podcasts. And now, 2024, it's an entirely different story. And what we're seeing is kind of the winners just being paid exorbitant sums. So certainly the Kelce brothers are the latest, but as you mentioned, Alex Cooper, Joe Rogan, all these people renewed their contracts at very fat prices. And so these are all the big media companies. In some cases, they're changing, who's distributing the show, and they're paying up for the top talent.
I'm a listener of New Heights. I'm sure that Travis and Jason listen to the Bloomberg Technology podcast. I'm certain that they do. The deal details are pretty interesting. Wondery's going to do a lot for distribution. There's an advertising component. Somebody did them a good deal.
Yeah, and not just the traditional stuff like you mentioned, ad sales. It's merchandise. It's really kind of a wraparound deal, which, given the sum, $100 million over 3 years, you'd expect Amazon and their Wondery subsidiary would want something out of this.
Yeah.
But this is everyone's trying to bundle these premier podcasts into their services, and so this is everyone is trying to get a piece of every little part of the deal.
They're all trying to get a piece of the elephant in the room that is Taylor Swift, Chris. This is why the podcast suddenly got a jump as well.
For sure. I mean, it started in 2022. It was doing okay, but it really took off last September when Travis and Taylor announced they were dating, and she started appearing at games, and huge surge in viewership after that, and I'm sure a lot more women than would probably normally listen to this podcast too. So it's definitely another part of the Swift universe.
Chris, in 15 seconds, tell me what's happening with Paramount.
Well, the bidding war part of it is over. Edgar Bronfman dropped out, and it looks like David Ellison will move forward with his deal, supposed to close in the first half of next year. But, we're never out of the woods quite with Paramount. There'll be probably lawsuits and regulatory issues.
Bloomberg's Chris Palmieri, our entertainment editor. Thank you.
Now, that does it for this rather busy edition of Bloomberg Technology. Big day tomorrow.
Yeah, coming up tomorrow, we have a special edition of Bloomberg Technology featuring an exclusive interview with Nvidia CEO Jensen Huang, 6:30 p.m. Eastern Time. This is Bloomberg Technology.